Hey guys, it's your favorite real estate investor, Brian Davila, and today I'm going to break down hard money loans for you. I'm going to break down how much interest you should be paying, how much money you're going to need to put down, how are you going to get the rehab costs paid back to you, and all the details that you need to know if you're going to use a hard money loan. So I want to start off by saying I am not going to lie to you and tell you you don't need money if you're flipping a house. A lot of these gurus are out here telling you you don't need money, and that is 100% fake news.
You are fake news.
What they're trying to say is you could use somebody else's money, but at the end of the day, you're going to need money, credit, or to borrow money from somebody else. All right, and I'm going to get right into the numbers because this is the most important part about flipping houses is the numbers. So when you're flipping a house using a hard money loan, there's three main expenses. So the first one is the down payment. So make sure to take a note of that. When you're speaking to a hard money lender, you need to figure out what is the down payment. Usually it's somewhere between 10 and 30%. And sometimes hard money lenders will tell you that they do 100% financing, but what you want to ask them is, are you paying point, origination, closing costs up front? And are you going to reimburse me for the rehab costs? But we'll get back to the rehab costs at the end of this video. So down payment, 10 to 30%. So for a simple example, if a property is $100,000 and they ask for 20% down, you're going to need $20,000 plus closing costs. So you need to figure out how much is the closing cost going to be. That is usually made up of hard money fees, escrow fees, taxes and insurance up front, and title fees, depending on what state you're in. The second main factor when you're trying to choose a hard money lender is interest. How much interest are they going to be charging you every month that you have this loan? A typical interest rate is anywhere between 8 and 13%. Of course, you might find some cheaper or you might find some more than 13%, but an average is anywhere between 8 and 13%. So the way to calculate that is you take the loan amount, so that's the amount after the down payment. So for an easy example, we'll do a $100,000 loan. If the interest rate is 10%, you do 100,000 times 10%, that comes out to $10,000. And you might be thinking to yourself, damn, I gotta pay $10,000 a month in interest? No, it's $10,000 a year. So the way to find the monthly payment is by taking that $10,000 and dividing it by 12. So that comes out to $834 a month in interest payments. And then you gotta calculate how many months is it gonna take you to do the flip. So that way you could calculate what your holding cost is going to be. The next big part about a hard money loan is the rehab cost. So when you're speaking to a hard money lender, you need to figure out, will they give you rehab costs, or will they reimburse you for the rehab costs, or will they give it to you up front? So for an example, let's just say the rehab is going to cost $30,000. You need to ask the hard money lender, hey, there's a rehab of $30,000. Are you going to front me this money, or will you give me this money after I finish the rehab, or will you just not give it to me at all? So the way that my hard money lender works is once I finish the $30,000 rehab, they reimburse me the $30,000. So I still need to have the $30,000 in my pocket in order to get the rehab done. So a lot of people misunderstand that part. They think that hard money lenders will give you the rehab up front. Some will, but I don't see that happening as often, especially if you don't have a track record. So that's a huge part that you need to speak to your hard money lender before you get started flipping homes. All right, guys, the last thing that I want to talk to you about are junk fees. So when you're speaking to a hard money lender, you need to ask them, is there any other fees besides the interest that you're gonna be paying? So usually they charge points. Points means you pay a percentage of the loan amount. So for simple math again, if it's a $100,000 loan, 1 point is $1,000. 2 points, $2,000. So usually those points need to get paid up front. So at the time of closing, you're gonna pay the hard money lender those points. And then on top of that, sometimes they charge origination fees, admin fees, document fees, whatever fees they could think of, you know, they'll put it into the settlement statement. So you need to ask up front again, is there any junk fees or any fees that I have to pay up front? And again, typical points are usually somewhere between 1 and 5%. Above 5, I feel like that's very high. And below 1, that's a great deal. But I would ask again, is there any other fees if there are no points? All right, guys, so I really hope this video helps you out a lot. Make sure when you're speaking to your hard money lender, you bring up all these different points. And if you could please do me a huge favor and subscribe to my channel. I promise I'm gonna be posting on here weekly, explaining every facet of real estate flipping. So I hope you guys learn a lot, and I'll see you guys on the next one.